Hey everyone, let's jump right in. Today, we're talking about some massive news for homeowners. A tax deduction that's been off the table for years is officially making a comeback, and honestly, it could put some serious cash right back into your pocket.
So if you're a homeowner, you've probably looked at your mortgage statement and seen that the payment is way more than just the loan itself, right? Especially if you had a smaller down payment, there's often this extra charge that just feels like a constant drain on your wallet.
And yeah, that extra charge is exactly what we're going to break down. For millions of people, it's a real financial hurdle. It's called PMI. And let's get into why it's such a big deal.
So what on earth is private mortgage insurance, or PMI? Well, it's actually pretty straightforward. When you buy a house and you put down less than 20%, the lender kind of sees you as a bigger risk. So to cover themselves, they make you pay for this insurance policy. But here's the kicker, it doesn't protect you at all. It protects them. Now this is where the rubber meets the road. We are not talking about a couple of bucks here. For every $100,000 of your loan, you could be paying up to $70 extra every single month. I mean, think about it. On a $300,000 loan, that could be over $200 a month just gone. But here is where this story takes a much happier turn. For a long time, there was a way to get some of that money back. And now, that awesome tax break is officially coming back. And here it is, the headline news. After just disappearing at the end of 2021, the power to deduct your PMI payments on your taxes is coming back for the 2026 tax year. This is a game changer for so many homeowners.
This timeline really shows what a roller coaster this has been. For years, it was a solid, dependable tax break. Then, from 2022 all the way through 2025, poof, it was just gone. But as you can see, starting with the taxes you file for the year 2026, it is officially back in play.
All right, so the million-dollar question is, obviously, who gets to take advantage of this? Because, not everyone's going to qualify. So let's get into the nitty-gritty of who's eligible.
It really just boils down to two main hurdles you got to clear. First, and this is a big one, is your income. And second, you have to be the type of person who itemizes deductions on your tax return instead of just taking the standard deduction.
Let's focus on income, because this is crucial. To get the full deduction, your adjusted gross income, that's your AGI, needs to be under $100,000. Now, if you make more than that, the benefit doesn't just cut off completely, it starts to phase out, which basically means the more you make, the less you can deduct.
And here's a little bit of a technical detail, but it's really important. When this all kicks back in, your PMI payments are going to get lumped in with your mortgage interest. This means it all falls under that same cap for the mortgage interest deduction, which is on mortgage debt up to $750,000.
Okay, so we've covered the what and the who. Now for the best part, the why. What could this actually mean for your wallet? Let's look at the real potential savings here. So to make this super clear, let's just walk through a quick example. Let's imagine your household AGI is right there at the $100,000 limit. And let's say your PMI is $120 a month. Over a full year, that adds up to $1,440.
And there it is. That's the payoff. Because you qualify, you can take that entire $1,440 and subtract it from your income. This lowers your taxable income, which means you pay less in taxes. It's a direct financial win.
And to be clear, this is not some obscure little loophole. Before it went away, 4 million taxpayers were using this deduction every single year. That just goes to show you how huge and how widespread this benefit really is for homeowners. Okay, before we wrap this up, let's just do a quick lightning round of a few other key facts you're going to want to keep in your back pocket as 2026 gets closer. All right, let's hit these fast. First, and this is important, you can't go back and claim this for 2022 through 2025. This is only for the future. Second, great news for anyone with an FHA loan. Your mortgage insurance premiums are also eligible. Also, don't forget, you can actually bug your lender to cancel PMI once you hit 20% equity in your home. And finally, remember this is on top of other great homeowner deductions, like for mortgage interest and property taxes. So we'll leave you with this to think about. Knowing that this pretty significant tax break is on the horizon, how might that change your financial planning over the next couple of years? Maybe it influences your budget, or even how you think about buying a home. It's definitely something to chew on. Thanks for tuning in.